This is Digital Perspectives with Brad Kimes. Subscribe for new content notifications. Now, here's Brad Kimes. Come on in.
Welcome back to the show, everybody. You can follow us on Twitter at BackupBradley above at the top of the screen, and everything that we're talking about here today. Look who I got with me. It's Friday, my favorite day of the week. It's this guy, Dave Cryptonaires. How you doing, my friend?
I'm doing great, Brad. How are you doing?
I'm doing really well, and I'm glad that, I know we've had a couple Fridays. It was hit and miss. I'm traveling. You got something. We got something. But we're back. We got a lot to talk about. There is huge things happening all over crypto and finance, economy-wise. Let's start with the economy. Can we start there?
Absolutely.
Okay, so Jerome Powell just spoke. Let's hear your thoughts on that. He just talked about, the idea of going for an inflation target, and obviously there's going to be inflation. They just printed $7 trillion. Let's hear your thoughts.
Well, this is probably, and a lot of people characterize this talk as being somewhat historic. And I think there's some people who have actually missed the idea of why it's historic. But there was one statement that he made in that talk, and it just blew me away. In fact, it made me kind of laugh. It made me laugh so hard that I was crying. He basically said, this might sound counterintuitive, but the Federal Reserve is interested in inflating the economy. Counterintuitive, that's what they've been doing for 100 years. Counterintuitive. I'm not sure who he was talking to. But it certainly wasn't people who understood what the Fed does.
Yeah, how about it? Yeah, I tell you.
Here's the historic part, though.
Okay. The
historic part of that speech is that typically when the unemployment rate, which is really, officially it's at 10.3%, but when it starts to decline, it's much, much higher than that. But when it starts to decline, that means the economy is recovering, it's overheating, and that's when interest rates go up. Well, that historically meant that they have to raise interest rates. This speech indicated that it doesn't matter if the unemployment rate goes from 10.3 official down to 3.5%, where it was before the health issue. They're still not going to raise interest rates. They're not going to do it. And that was the really, really kind of historic moment made in that speech.
I tell you what, it is remarkable where we're at here, because along with that speech the week before, and we'll just touch lightly on this, the IMF had a webinar with Barry Eichengreen, who was just 2 weeks before that on Blockstars with David Schwartz. And in this webinar, the narrative was external adjustments to the exchange rate peg of dominant currencies like the US dollar. And then Barry Eichengreen talked about the Triffin dilemma being a real issue with the US dollar, and something has to be done. And that was the understood narrative from every single person on that panel. And they went into, trading and goods and the medium of exchange, and even when it's not involving the country itself, but the US dollar as the global reserve currency. Can you just talk about this idea of potential external adjustment? You had spoke before we went on about previously, years and years ago, they had a lockdown exchange rate peg. Can you talk about that?
Yeah, there was a fixed rate between most of the currencies around the world, and that was abandoned because central banks couldn't inflate and couldn't continue to print currency. So they had to make that floating rather than a fixed rate between each of the currencies. What's interesting, though, is that they bring this issue up now, because if you take a look at what the U.S. has done, we have really unprecedented trajectory of money printing with the Federal Reserve buying up all of the basically the entire yield curve, and the U.S. dollar has continued to decline in response, because now there's so much stimulus that has been injected into the system for the last 6 months that dollar can't hold up. And so the fact that they want to adjust it even further to a lower point is really just adjusting it to the amount of money printing that's already taken place. So I think by announcing this ahead of time, they're just giving people a heads up saying, hey, look, we're going to continue to print. The U.S. Federal Reserve is going to continue to buy up all of the issues of the debt across the entire yield curve. And there's nothing that, the dollar's going to have to drop. It's going to have to drop. In fact, if they don't do it, it's going to do it anyway, and the market's going to do it for them. So I don't think they're going to have much of a choice. Now, what that does for the United States is it does help economically a little bit, because now our goods and services are going to be a little bit cheaper than countries who if we cut 5% our currency based on the exchange rate, our goods and services are going to be cheap. So, if we export to, as long as there's not a tariff that's going to offset it, if we export to another country, people would be willing to buy U.S. goods again.
Well, and this is a remarkable notion because, it isn't just you and I having this conversation, right? It's the IMF having this conversation. It's Jerome Powell talking about the inflation, which is a contribution to this conversation. And to build on that, you may not be able to see this on your screen right yet, Dave, but Brad Garlinghouse 2 hours ago puts up a tweet. The pandemic is throwing so many playbooks out the window. Yesterday's action, talking about Jerome Powell, flies in the face of decades of precedent. Signs point to further dollar debasement in the near term, leading to further diversification of assets which will certainly be good for crypto. Dave.
He's on it.
Wow.
He knows it is unprecedented, because the point of his speech yesterday or Wednesday yesterday at Jackson Hole was the fact that it doesn't matter if the economy starts to heat up. They want to overshoot. They are now targeting above average trajectory for inflation. They want to overshoot their targets, and their target has been 2%. But let's face it, since the financial crisis, they may have hit a quarter where it was 2%. On an annual basis, but they have not hit 2% in a single year since the financial crisis. And so now what they're doing is they're saying, hey, look, we're going to adjust for the low inflation that we've really seen over the last 10 years, and we're going to shoot for a higher target, and then maybe we'll get to that 2%. The problem, of course, is that when they can't stop, they cannot stop on a dime and stop the money printing, and then the inflation is going to run out of control. And if they want, 2%, they may have to go to 4 or 5% target rates. Now, they didn't mention what the target rate was, but if they're going to get to 2%, and then they want to average it. So think about this for a second. And this is kind of reading in between the lines of what they're saying. They shot for 2% since 2009. That was 11 years ago. We didn't get the 22% inflation target that they thought they were going to get. Are they going to try to average that out now for the next couple of years? So in other words, they didn't hit the 22. They only got 12. They need 10% to catch up to be the average again. And if that's the case, then they're going to shoot for 4 or 5% over the next 2 to 3 years. And now we're going to hit 15% in 3 years.
Oh, wow.
In order to make up for the 11% they missed over the last 10.
Yeah. Well, if I tell you what, there's some hurt coming if that's the case. There's some hurt coming.
Well, here's now I sent you a picture. Maybe this is a good time to bring that up.
Okay.
This is the M2 money supply versus inflation. Inflation is in the red line. The M2 money supply is in the black line. You can see far over to the right of that graph how the money supply, the M2 supply, has gone absolutely parabolic to the upside.
Yes.
See that?
Yes.
If you look in the past, especially in the 70s when we had some runaway of inflation, there was always a delay between the money printing, the M2 money supply, and the inflation rate. So, for example, if you If you kind of hover over around May of 1972, you see a dip in the inflation rate to 2.71%. M2 money growth rate was 11.4, and you can see they're on opposite ends of the spectrum there. They're really kind of opposite. It took the rate of inflation to increase until October of 1974. That's like a 2-year period. And from the research that I've done, going all the way back to the 1850s, it's always been the M2 money supply, whenever it has increased, it's been between a 12 and a 24-month period in which we see inflation start to run really hot. And so you can see on this graph, that's exactly what happened pretty much throughout the 70s. We didn't see it too much in 2009, but a little bit, because they started running hot again, right? And then because of the deflationary forces in 2012 all the way through today, we've had severe deflation already. We talked about this actually a few weeks ago. Commodities have declined. Commodities have been on a 10-year decline.
Yeah.
We had cryptocurrencies come out in 2012. 2010 and 2012, 2013. That was the beginning of cryptocurrencies. And we've seen runs up and then run down. So we've had a lot of deflation in cryptocurrencies as well, but especially commodities over the same period of time. But now if you look at the money supply, just over the last few months, it's just parabolic straight up.
Oh, it absolutely is. And look, I mean, history repeating itself. Just to look at this graph that you've given us here, I mean, you could see what's about to take place. I mean, the reaction to the money supply being printed and coming up in a parabolic way is we're going to see eventually the inflation go nuts. And this is just a constant cycle. You could circle this 3 or 4 times through the chart where you could see this happen. Absolutely.
We're going to see this, I think, in a much, much greater way than we've seen in the past.
Yeah.
And here's a couple reasons why. Prior to the creation of the Federal Reserve, you might think there was no such thing as inflation, but there was. There's a lot of periods in which we did have inflation. But because of our reliance on gold as money, prior to 1900, 1920s, and prior to 1900 especially, there was inflation based on discoveries of new gold. For example, in California in the 1850s, early 1850s, the gold rush. The gold rush was actually inflationary. Why? Because of an increase in the money supply. At that time, there was a great deal of reliance on gold as money. And so what happened with the gold rush, and there was also quite a bit of gold discoveries and gold mine discoveries in Australia at the same time. Well, within a few years, the entire world was in an inflationary environment. It was new money that was found, that was put into the system. And anytime you increase the money supply, you get inflation afterwards. The same thing happened throughout, and I think it happened again like in around I'm going to say early 1900, maybe 1890 to 1905. Again, there was a scientific discovery that used cyanide in order to separate gold from low-grade ore. Iron ore. And so when that happened, there was also now an increase in the money supply, again, which was gold at that time. And it also led to inflation. Now, they were fairly mild compared to what we're going to see. But the point is that anytime there's an increase in the M2 money supply, you're going to get inflation. Well, look what we've seen here. We've seen an incredible parabolic increase in the money supply. But I'm going to suggest something else to you, and I have never heard anybody else talk to this, but it makes perfect sense to me. if gold was discovered and mined in the late 1840s, early 1850s in California, and the gold rush, and then led to inflation because of an increase in the money supply, what has the development and the creation of new money or cryptocurrencies going to do to inflation? And it's not just the U.S. dollar that is now being printed to the point of trillions of dollars and going parabolic in stimulus, but it's also the creation of new money. Mm-hmm. This is really unprecedented. We have what's our market cap now? 345 billion.
Yeah, somewhere around there, 58. Yeah.
This is a brand new supply of money that really should be added to the M2 money supply, in my opinion. Ooh. Because you can use it to buy anything you want. It's a new form of money. It is an addition to the money supply in the world, and that's going to create parabolic inflation.
Yeah, I could see it. I could absolutely see it, and I think you're making a fantastic point. There's a couple things I want to build off of that narrative you just spelled out there, because that's quite interesting. And I mean, that could bring on hyperinflation, right? You know, because people running for high ground, and normally metals would be that place. And then in this instance where you have, I mean, you know, a liquidity crisis, a global event, and then a health crisis on top of it, you know that there's going to be these crisis companies that come out of this, the innovation that is kind of bred from these bad events that happen in the world. Look at the companies that jumped out of the last crisis we had in 08, 09, right? We got the Ubers and the this and the that popped out of there. Those companies rose up out of that, decentralizing a lot of different areas. Airbnb, right? All that stuff popped out of that time. Then coming into this time, you start seeing, well, that cycle is there to happen again, but you add in cryptos as an opportunity to invest, and the fact that it has use case as money. You look at the picks and shovels that are behind these companies, the Coinbases, the Ripples, and the Upholds, right? All of these companies that are out here, because this is the new internet of value. I mean, this is what's unrolling while the backdrop of the old economy is going into a complete disarray. I mean, we're getting ready to see some serious trouble headed our way. And the second avenue I want to go with the conversation is the federal digital dollar, a digital dollar and a digital wallet. What a better time, Dave, to introduce a brand new digital dollar and a brand new digital wallet when you got inflation going through the roof, and you want to try to convince people, well, don't use the paper money. You need to get into this digital wallet. I mean, let's talk about that for a second here.
Yeah, so it's just I think it's the next phase of of inflation, because look, when Nixon took us off the gold standard in 1971 and said, no, we're not. You know, that's the end of the gold as far as money goes. We're going to float. We're going to have fiat currencies so they can adjust that rate. Well, it's a natural progression for us to go digital, because now, I mean, they don't even have to print the dollars anymore. All they have to do is press a couple buttons and it's in your bank account. Of course, everybody's going to say, well, you better put a cap on it. Or how are you going to maintain the value of that digital currency? I mean, the only way that they can destroy the value of the dollar, the paper currency that we have in our wallet right now, is by simply printing more of them all the time, and then having them deposited, it's already digital. So all they have to do is say, hey, look, you get a loan. I'm not going to give you $10,000 in cash if you want a personal loan. I'm just going to make a notation in your account. You got $10,000. Mm-hmm. So is there any limit to the digital dollar project? I haven't heard one yet. I haven't heard anything about saying, look, hey, we're only going to print 100 trillion of these and that's it. We're done. You know, there isn't anything like that.
No. Yeah. It's quite interesting. Yeah, it's quite interesting to your point, because when I think of the digital dollar, one of the things I think of, besides Chris John Carlo and what they're doing at the Digital Dollar Project, is I think about Visa and those patents. Those daggone patents that they went and got about repatriating the physical cash into digital dollars, which now they don't own the patent to the digital dollar and the creation of the dollar. So obviously this would need to be in conjunction with the Treasury's approval. And if so, then you've got this catch-all bucket that you've kind of created with the Visas of the world, right? And all these different places to repatriate the collection of physical cash and issue a digital dollar. Then you have to ask yourself, will the digital dollar be the same value as the paper dollar? Or are we about to see like a 2-to-1 ratio to incentivize you to get to the digital platform? Well,
right. So I think we're going to be, I think they're trying to eliminate as much chaos as possible as they go into this transition. The problem, of course, is that everybody's going to be totally confused about, hey, wait a minute. This is a US digital dollar. How is it different from XRP? How is it different from Bitcoin? How is it different from cryptocurrencies? Is it? I mean, maybe it's the same thing. It's just a different form of currency. Is there one currency, or is there one cryptocurrency that I need to have in my account in order to transact on a daily basis? Is the US dollar, digital dollar, the only thing I can use to pay my bills? We've seen a lot of some states and some counties now accepting Bitcoin for tax payments. Well, I think it's going to create a little bit of chaos in the system, that there's going to be this kind of transition from the old system to the new system. And it's going to be a little chaotic, and there's going to be some losers and there's going to be some winners in this space. Now, obviously, this, I mean, I don't know how many cryptocurrencies are out there right now, 4,000 or whatever there are, but there's only going to be a few winners, I think, after all the dust settles.
Yeah, I agree. It's just blowing me away, because I really feel like, things are hitting a stride now that it's obviously on an unstoppable path, that, cryptos are a legitimate market. There's more and more investment coming into the space from the institutional level, which is obviously important. None of this happens without the institutional side coming in first and getting to, set up shop. And then seeing, the companies like we've seen over the past several months with Link2 and the Coinbases, the Ripples and the Upholds and the Robinhoods, and all of those entities looking to make that pathway towards an IPO. All of this is about to bust open, and it's on the heels of the economy falling apart. I mean, how can we not win collectively as a whole here?
Yeah, so there's a couple of things that are really interesting about where the economy is right now, because production has gone.
Yeah,
I mean, it's just dropped like a rock, right? GDP is like negative for the quarter. We're probably going to see GDP just taking a huge hit by the end of the year, and at the same time, you've got money printing and stimulus going through the roof. That is going to lead to an incredible amount of inflation going forward. And, I keep thinking about the fact that, the same thing happened to Rome, the same thing happened to Brazil and Argentina and the Weimar Republic and Germany and all this stuff. They couldn't stop all of the money printing. And a lot of the reason for it was, number one, they needed to finance wars. Well, we're not in a war right now, but we are we're in a financial crisis of sorts that was created by this pandemic. And so it's kind of like a war, because they have to throw a lot of money at it, or a lot of people are going to get hurt. They could have done. Now, here's the thing that kills me, is that the Federal Reserve actually had an opportunity to do the right thing back in October to December of 2019, when they started, 2018, when they started raising interest rates. Do you remember that?
Yeah, I do.
They did. They raised it for a short period of time. And then in January of 2019, Powell said, no more. We're not going to raise any more interest rates, because the economy really started falling off a cliff at that point.
Mm-hmm.
And the stock market really took a big hit. What happens when if the economy does not bounce back, but they continue to print money? And so we've got production that's still very, very low.
Well,
this is one of the big issues. And so we talked about a few months ago, actually, about the idea that they're going to take this old system, this old monetary system with the US dollar, the printing of the US dollar. I'm talking about physical cash.
Physical cash, right.
And putting that in the old debts and the old system, and they're going to put it into a vault someplace and just let it sit and play while they roll out this new digital system. And I think we're getting close to the point where we see hyperinflation start to hit us in about a year, 18 months, maybe 2 years down the road or sooner, who knows, in which that transition is going to be complete. And it's going to be, I think, for people who do not have assets now. See, when deflation was, the main issue that we had at the beginning of the year, you needed cash. Now people have got cash. In fact, there's record number of deposits in the trillions of dollars of cash in the banking system. And that's why we don't have to do repos. We don't have to do the repurchase agreements overnight anymore. In fact, the Federal Reserve in their last FOMC, they came out and said, we don't have any repos on our balance sheet.
Everybody's liquid. Everybody's liquid. They don't need it.
Everybody's liquid. And so what happens now is that inflation starts to take off. Guess what happens to that cash? The cash is just going to go to the trash.
It's going to go to trash. And that's exactly right. And, I was watching a Ray Dalio clip, and he was just stressing that cash is trash and in that exact term. And I can't help but think of the great Steve Miller Band and that Your Cash Ain't Nothing But Trash. What a great song that was. But great song. But coming back to it, it's just, I worry for people because, in a time like this, you want to have cash available, but you don't want to be invested in holding cash in that regard, right? So, I mean, where are people going to go?
The Federal Reserve, the government has pushed everybody into risky assets.
Right, and that's where we're at here.
Cash.
Welcome to crypto.
Yeah. Well, it's the stock market too. We mentioned, we talked about this months ago that the whole depression, the whole 1929, 1932 playbook is off the table. Powell said, "I'll do anything. I'll do whatever it takes."
What is we don't know what's going to happen other than there's trouble coming. I mean, it's just like looking at the sky and going, I'm not sure how long it's going to storm. I just know a storm's coming. Look at it, And when you think of what is coming, I don't know. I feel like, because we're in a record situation, how does the Fed get out of this? How does this cycle stop? I mean, is it going to take a new currency introduction with the digital dollar as they change over, allow the paper money to keep coming in? Would it be the same digital dollar as the federal fiat paper dollar and you're just issuing for a digital issuance of that dollar? Where are we at?
I wish I knew. I have no idea how this is going to play out. Every time I think I get a handle on it, somebody throws me a curveball.
I know.
It's like something new comes out and it's like, what?
Well, let's go to the crypto side because, there's something new happening there too. So with the Flare network, have you seen this?
Yes. Yeah, that's very interesting. So everything's going DeFi. It's like, okay, so this is the new way that people can save money and actually earn something on it.
Right. So
and it's crypto, which is interesting. It's like, wait a minute, there's a use case here for crypto besides speculative profits or utility and cross-border payments. It's actually earning interest. Now that has got to be like, if I was in charge of a pension fund, like a state pension fund for state employees, boy, where can I get 6%? All my models are based on a 6% return.
Yes, sir.
Where am I going to get that 6%? No place except for crypto.
You're going to see this roll out in a big way, right? Where you see the hedge funds and those like that are going to take 1 to 3% and allocate of that fund into crypto to hedge what they see coming as far as, an inflationary situation happening with the cash. So,
well, that brings up a good point though, because So in real terms, what is that crypto return going to give you?
Right. Oh, a much larger return. You're going to get a much larger return. They just know they're going to put a certain portion of that portfolio in there like a hedge because they know it's going to give them, what, 8, 12, maybe even 20% gains depending on how hard it gets pushed.
Well, in nominal terms, yes, because what you're going to do is you're going to get a 5, 6, maybe 7 or 8% return. But if inflation really starts to pick up, you're going to have a 1% return on that 7%. If we get 5% a year, you're looking at maybe a 1 to 2% return. But that's still better than the 0.025% that you're getting in your bank account.
Which is laughable.
Unbelievable.
It's unbelievable. So when I look also at the Flare network, one of the things I see, one is macro-wise, to build on the point you made, is we are moving from a debt-based system to an asset-backed system, and it's very encouraging because it does give real use case and value, intrinsic value to crypto itself, and that's remarkable.
It's very encouraging. I'm for it. I think it's great.
Me too. I think it is too. And it'd be nice to see, hey, I think we've done it this way long enough to know that this way doesn't work, right? So, but looking at the Flare network, this is amazing because just the other day they put out a post and they said, look at it, basically see them as a two-way bridge between the Ethereum network and the XRP ledger. Now, this is extremely exciting to me because I tend to, everything's an analogy with me to get me to understand it, right? So I work well with that, but I start thinking, okay, I remember in the early days of the internet when we had email and email popped up, and then you could put file transfer to it, right? So you could attach files and stuff. It's like, man, this is getting really cool, and then it went from there to you could build websites and just go crazy with it, right? Just all this stuff started to really take off, and then it became this federated system, which is the internet we use today. I feel like it is the early signs of seeing the Ethereum network and the XRP ledger tells me, well, you pick which one you want it to be. But your smart contracts and your decentralized universal ledger look a lot like, to me, like you just got email and file transfer melded together. And over time, you're going to see that ability to build websites with another network. And we get this federated system. Just, you don't know what it's doing back end. You don't need to know,
Great analogy, yeah.
But all of this works seamlessly to tie it all together. And the Internet of Value feels like, to me, it's like, wow, you just saw another baby to the Internet of Value be born. This is going to be incredible.
Yeah, well, there's a lot of issues, with we've had the Internet of Information. We've had that whole discovery process, and all of a sudden, and it's kind of funny, but we're also, before the internet, in order to prove who you were, you had a driver's license, maybe a passport, and a birth certificate, right? And you needed to present that in person in order to prove who you were. And now, once the internet blew up, all of a sudden you can like fake people's ID, you can imitate them, you can like pretend to be them. And so, a lot of fraud and a lot of identity theft took place on the internet because you get all kinds of information about people. It was only typically what the person, themselves knew, and now it's public knowledge. And so you had this really kind of a getting away from privacy. So privacy is a very big issue. And when we had the internet for information, well, now cryptocurrencies I see in digital ledgers are taking back that privacy, putting it back into the hands of the individual and saying, look, you want to know anything about me, this is my global ID or whatever it is, and now I can prove that I am who I say I am because I'm going to move a little piece of this block over to here onto this blockchain. And so I proved exactly who I am.
I think a global ID, pay ID, all of these things, solutions to solve a lot of this trouble, right?
Well, that's what's so resilient. See, this is what I mentioned a few weeks ago that the the only thing that could possibly save us is technology. And I hate saying that, but it's like, there's a problem out there. And if there's a problem, some bright person sitting at their computer, is going to figure out how to solve it. And I think cryptocurrencies is one of the ways in which we've solved a problem of inflated currencies in the fiat system.
Yeah.
And now global ID is a way of solving a problem about identity and identity theft and all those issues, right? And so technology can provide solutions to things. And so it gives me a little bit of of hope that even if we do go into hyperinflation, there's going to be a part of the economy that's still relatively new in cryptocurrencies and digital assets. If you were in it, it's kind of like a safe haven almost with all of the other craziness going on in the hyperinflation scenario.
That's so well said. I mean, it really is like that. Now, with the heels of knowing that all of this innovation is about to unfold in a very big way, because looking past just the innovation and the startups and the institutions that are coming in and setting up shop, all of that's a given. That's a natural order, right? We're about to see a federal charter released with detail after detail after detail for the U.S. financial banking system that is registered as a federal charter bank, from Brian Brooks from the OCC in the fall. And he said he's going to come out with a very detailed federal charter here. I happen to personally believe, and I had a conversation a few weeks ago with Diana Adachi, formerly of Accenture, and now working with Greg Kidd at Yucca Labs and Hard Yucca, which also Global ID, right? Greg Kidd. So we were talking about the OCC and this federal charter. I happen to believe that this has a very good chance to become that regulatory sandbox that we've been looking for banks to truly get in the water and begin using cryptocurrencies. Because I think somewhere along the line, whether it's Brian Brooks or the FSOC or the Treasury itself or FinCEN, somebody's going to come out and go, they're currencies, go back to work, right? I mean, what else is it? I mean, banks deal with currency. How else do you get banks to deal with these things unless you pretty much get us in the neighborhood that they're a currency one way or the other?
I'm excited for it. I think that the banks are going to just be absolutely. I mean, I would love the day in which I didn't have to write down my 12-word phrase anymore.
Oh my God!
And I just go and I just open up my bank. I do a login to my bank on, and I can just deposit all my crypto in there. Just deposit all my USD or my digital dollar or my whatever I have. I just want to be able to put it in one place, and I don't want to have to think about my 12-word seed phrase and make sure that it doesn't get burned, drowned, or destroyed, while I'm on vacation or something, or stolen. And, to me, that is a logical thing to happen. And I think everybody is kind of waiting for that to happen.
It's the next big step. It really is the next big step.
It's going to happen.
Yeah.
It's going to happen.
Yep.
It's going to happen.
It is. It really is. And I just talked to, and I don't know if you saw it or not, but I just talked to some guys from Vesto, Travis and Christopher and Wolfgang, and these guys have a banking services platform that is the buy and sell side, plug and play to the front end of the banks, knowing they can already custody crypto. This is remarkable. I mean, these people, they're ready to go. They're testing this thing. They're ready to rock and roll here.
They're in a position that, there's so much innovation going on in this space that they're in the momentum now. I mean, actually, even in 2018, okay? I mean, you're talking a year and a half, 2 years ago. None of this would have even been, thoughts in our brains because we said, oh, look, we're still on the fringe. We are, as a crypto investor, as a hodler of cryptocurrencies, we're on the fringe of society almost,
Yeah.
And it's like, are we cyberpunks? What are we here? Are we real investors, or are we just like, playing on the fringes? And now you can see that this is going to be mainstream in a very short order. Yeah. And if anybody had any doubt about the fact that cryptocurrencies, we're going to eventually, and just like DAI says, he says this all the time, and I keep remembering the story of him telling his wife in 2013 when he was sitting there watching cryptocurrencies, when Fidelity starts to offer cryptocurrencies, we know we made it. And that's exactly what's going to happen. It's gonna take place. In fact, I feel like we're getting closer and closer, and by the end of the year, in my opinion, by the end of the year, something big is going to happen. It is going to be the year of the digital asset.
I do believe that too.
Really big stuff's coming.
I really do believe that is true. And Fidelity already offering Grayscale, the investment fund, to Bitcoin and things of that nature. It's absolutely happening, and it's very exciting. You touched on something. I just have to touch it for a minute. You talked about being a nerd and not being able to fit in and have a conversation as a crypto enthusiast or investor. I already had points against me because I've been a musician for 30 plus years of my life. So I'm a nerd. I'm a music geek, and I don't do well. I mean, I could joke and kid around, but I'm only good for like a certain amount of topics, right? And then I get into crypto and find crypto in my life, and now I'm socially inept. I can't even function in a circle of humans of more than 3. And if I do, we better be talking about music or crypto, or I'm leaving.
Yeah, I mean, I don't know if you have a lot of friends outside of crypto, but I don't. I don't. Mean, besides computer nerds, I mean, the friends that I had that were into computers and websites and building, businesses online, going all the way back to 1999. In fact, when I started in 1996, either they're into crypto or they're not my friends anymore. I mean, it's like, we just got nothing to talk about, It's just, oh, okay. How's the job going? Oh, good. Yeah, it's going good. How's the business? That's good. All right, good. See ya.
Yeah, because it's painful. It's like, Mrs. Backup, she'll tell me, she'll be like, listen, we're going here, and there's going to be family, and there's going to be friends. I do not bring up crypto. So I just end up sitting there looking very withdrawn, and then everybody's like, well, you don't look like you're having a good time. Well, I just got told I couldn't do me, so I don't know. It's like, why am I going again? I don't get it. I don't get it, but it's a part of it.
Well, that's going to change because in about a year, people are going to start coming up to you and start asking, hey, what's this crypto stuff again?
Yeah.
Oh, my God. Here's the cheat sheet here. Have them ready, printed, stick them in your pocket, and just hand them out.
I'll tell them, if you're not aware, I did make a course. Maybe you should go take the course. Let me steer you to the link.
Go get the course.
I saw you coming before you got here. You know what I mean? Oh, this is really fun. So, okay. So look, we're into this thing. I'm glad we've caught up. What are your final thoughts right now? What you're seeing in this space, Dave?
Well, in the crypto space, I think reality is starting to come into the space. I mean, prior to, I would even say in the last month, just the last couple of weeks, we as a community in the crypto space let our imaginations fly. Sometimes we had like wild speculations about what's going to happen. We didn't have a clue of what really was coming down the road. But now at least we have some what I would call leadership in the government, at least in the government agencies like Brian Brooks. I mean, obviously this guy is clued in. He knows what he's doing. He's very, very sharp. And now he's got a position in which he can really affect some change. 100%. And that is very exciting to me. I think this is gonna happen. I would say even a month or two ago, I would have said, hey, look, anything's on the table. I have no idea what's going on. All we have is breadcrumbs. We've been trying to put all the dots together. But until that happened, until he came out and said, yeah, banks can now custody crypto, to me, that day should be National Cryptocurrency Day, and I would celebrate it.
I agree, and I have been hammering that home since the day you said it, because I think that absolutely should be National Cryptocurrency Day. It is amazing. And, you know, something else that's amazing I wanted to hit people with, because I told you about this, it came in just before we started recording, is that I just received the promotional trailer for Kryptonaires.
Woohoo!
Come on in. And now we're still in the post-production process. It is a long process, and there is an enormous amount of footage to sift through. But we have a new trailer for people to see about what is coming for them. And my, oh my, oh my. And I'm going to play it right now, Dave. And I know. And I don't think when I show it on my panel, you're able to actually see it, are you?
I hope so.
Let me see. And let me know if you see this screen right here. Do you see this screen? Probably not.
That's all right. I'll watch the replay.
Yeah, exactly. I'm going to let this spin, Dave. So it's going to be 2 minutes. If you want to hang out, just hold on for a second here, and then we'll wrap if that's okay.
Sounds good.
All right, here we go.
Cryptocurrencies, Bitcoin, Ethereum, XRP. What are they? And what is this emerging marketplace that has been gaining a foothold for over the last decade?
Life becomes so amazing because you realize that all the rules in life can be rewritten. All the systems around us were built by people no smarter than us. Everything that we have, we inherited. And we inherited from people who had significantly less than we do in terms of technology and information and so forth. So there's really no reason our life should be governed this way and controlled this way. So the primary motivation is saying, how much can we change the system?
Some people believe it is the next dot-com era, the new age of the Internet of Value.
This is just like the internet in 1980s. So you definitely need to get on the shape right now.
The Libra moment, at the very least, really forced people to grapple with the incoming future of financial technology and the fact that there are growing capabilities to create different kinds of market infrastructures that allow for new ways to view not just how we move money, but to redefine what money is.
And has captivated the financial markets and big thinkers like nothing we have ever witnessed or like never before.
Lived a life where I've never been able to turn off my brain. So for me to find an industry that welcomes it, I'm living exactly what I wanted to do. I've had enough careers where they said, go home, Coley, get a life. And this is my life. I am excited for this. So,
a chance to create generational wealth beyond our dreams. Join us as we take you through a journey of what was once like the Wild Wild West. Turbulent and unpredictable, but now intriguing and credible. Of what is quickly becoming a legitimate marketplace for investors of all kinds, from Wall Street to Main Street. There is but one question you have to ask. Who wants to be a Kryptonaire?
Wow. I got to be honest. It is so amazing. My hair is standing up on the back of my neck. I am so excited. It just reminds me and takes me back through all the work and all the interviews and so many people that were so kind to take part and to sit down with us. And I just cannot wait to bring this movie to everyone that has been a part of it, help crowdfund, help donate to the film, and just people who want to see it in general. I think we've captured the whole crypto movement in a whole in a really, really special moment of time, Dave.
Well, I'm super excited. I can't wait to see the entire movie. It's going to be I'm dropping everything when it comes out.
Oh man, I'm so excited. Dave, thank you so much for being here. You know, my final thought is that, you know, cash is nothing but trash. And, you know, this is really where we are. And if people out here, I don't give financial advice, but if people out here aren't looking for other places to go with their money, they better get started because there's trouble coming. There's no doubt about it.
Absolutely.
All right. Thank you so much. Take care, my friend. We'll catch you on the next one. All right. So, guys, thank you for tuning in. Make sure you hit the like and subscribe. Share with somebody you know. We'll catch all of you on the next one.